On today's hot sheet, I'm discussing Friday's PCE report, housing inventory for the week, as well as existing home sales for the last month. Today is Monday, December 23rd, 2024. I am Byron Lazine, and the final hot sheet of 2024 starts now. Good morning and welcome into this final hot sheet of 2024. So glad to have spent, I don't know how many hot sheets we did this year, but we really don't miss a day if the markets are open Monday through Thursday. It's your only 24-hour look back live on the internet for the housing market. Hit the thumbs up and subscribe. If you've waited all year to subscribe, now would be the time to do that. Hit the subscription and the notification bell. Leave a review on Apple or Spotify if you listen to the replay there. Good morning. So many of you guys jumping in here on the live chat. Merry Christmas, happy holidays, and of course, Happy New Year, because we won't be back on the hot sheet until I think it is January the 2nd is the next scheduled hot sheet, which is next Thursday. So next week on Thursday. But we've got a lot actually going on here today, surprisingly enough. We'll start with Friday's PCE report. Obviously, a lot of eyeballs on this as we look at inflation and we consider Jerome Powell and the FOMC's commentary last week, which sent the market certainly into a tizzy. The 10-year is still not trending anywhere close to the direction that we would like. And there are a lot more fears now going into 2025 that inflation is going to be stickier. There's a lot more, there's a emphasis from the Fed that they're going to reduce cutting, talking about a projection of only having 3 cuts out of 8 meetings, next year. So where did PCE come in on Friday? PCE, in fact, the inflation report that is the Fed's favorite PCE, came in lighter than expected in November. So this is good news, right? PCE reporting, let me get this up on the screen here. Eventually it will do that. There it is. PCE lighter than expected in November. This slow progress on reducing inflation, though, has damped the Fed's plans to continue cutting rates next year, as we mentioned. Okay. So the Fed's favored measure of inflation, as I mentioned, showed prices increase 0.1% in November and 2.4% over the last 12 months. This is according to the Commerce Department's report on Friday. The 12-month pace marked a re-acceleration from a 2.3% 12-month increase on PCE in October, underscoring the challenge the Fed faces in getting inflation back to the 2% target. But here's the thing. The projection from Wall Street Journal was a 0.2% rise in November. Okay, so how good of news is this? Let's go over to Nick T's Twitter feed. Nick Timiraos is the Adam Schefter, if you will, of the Fed. We've mentioned him here in the past. He breaks it down for us. Core PCE mild, he calls it in November. Prices up 0.11% from October. That's a 1.4% annual rate. The 12-month rate held at 2.8%, the 6-month at 2.4%, and the 3-month at 2.5%. Okay. The 3-month was 2.7 in November. So definitely improvement there. Headline PCE was also mild, with prices up 0.13% from October, a 1.5% annualized rate. The 12-month rate ticked up to 2.4 from 2.3. The 6-month annualized was 1.9 versus a 1.6. And the 3-month annualized held steady at 2.1. Now, this is, I think, probably the biggest thing he says in the tweet thread, that the figures on Friday, even though they came after the FOMC meeting, where we saw that the 10-year shot up, that the markets went down, that investors hated the tone coming out of Jerome Powell, this would not have been news to the Fed. So it's not as if what he's saying is if the meeting was this week. Of course, they wouldn't do that on a holiday week. Jerome Powell is probably already having caviar for breakfast this morning. But if the meeting was this week, what Nick T from the Wall Street Journal is saying is it wouldn't have changed anything that Jerome Powell said last week. So while this is good news on the PCE, he's saying the FOMC already knew this. They were already able to have a feel for this data. If you know what the PPI is reading and the CPI, which came out, just a couple weeks ago, and import prices for a given month, you can come up with a pretty reliable PCE projection. So the consent or Nick Timmeros is, consensus is that, hey, they knew where PCE was going to come in, still didn't change how they approached, that press conference on Wednesday. Didn't change their outlook, and so the markets haven't responded. Like we didn't get a PCE report on Friday, and then all of a sudden the market's like, "Ooh, sigh of relief, came in later than expected," or what have you. No, look at the 10-year; it's still at 4.54, really unchanged. Friday didn't change really at all, stayed elevated up over 4.5. Okay. We broke the 4.5 level after the presser. Okay. After the press conference with Jerome Powell, after the FOMC made their decision to do a cut, but to slow down cutting. So still at 4.5, nothing there. Markets aren't like, taking off and making up for those losses that the market had last week either. Okay. In fact, Dow's down a little bit here on opening on December 23rd, opening bell. S&P, NASDAQ, all flat. You saw some futures, some pre-market activity inch higher, but really not much movement there on the markets. All right, let's take a look at housing inventories we do every single Monday. Per Altos Research, did we get any unusual gains, or are we still on track here to hopefully see a more positive picture in 2025 as it relates to housing inventory? Much of the inventory that is hoping to come to the market at some point continues to be frozen up with the interest rates. Okay. We always see a drop in housing inventory this time of year. How big is it? The shift has created much healthier housing market. So far, the shift in inventory. And so there's some potential here that we could be in the beginning stages of getting even more inventory back. We did see the drop as expected, the seasonal drop from 682,000 a week ago to 667,000 on active inventory. The drop last year on inventory, same week, was a little smaller, it was 10,000, but the bottom or the number hit down to 528,000. So we're 140,000 more on active inventory, healthier place for sure. We're 26% more on active inventory than we were last year. We started the decline later than you would in normal years, looking normal as in 17, 18, and 19. And it'll be all about where we start the year. Okay. If you look at 23, I mean, we really dropped inventory into that spring season. Certainly 21 that happened. Okay. In a normal, market, you come in January holding where you ended the year firm, and you stay there basically all of January. Look at 17, 18, and 19. You basically hold firm where you come in the year on active inventory, and then come late February into, April and, March, April, May, June, you see an acceleration in adding inventory to the active market. It'll be interesting to see if, and that's what we saw in 24 as we started to see, more inventory come back and hopefully start to get closer to a normalized market. It'll be really interesting to see if we can follow that trend, that historical trend, as we get into the next, when we get past these 2 weeks and we get into January and we look at data on all of January. Are we holding firm where we enter? Looks like we're going to enter January maybe around 650, maybe 640,000, somewhere in that range on active inventory. We started this year at 513,000. So if we just kind of keep the gap that we have right now of 140,000, that would suggest, we'll be around 650 going into, January 1. If we could hold firm at 650,000, I mean, we started January at 513,000, and we held firm basically at 500,000 until we got to March and we started seeing accumulation of inventory. we could hold firm at 650, I mean, the peak this year was 740,000. Maybe the peak next year could get up over 900,000 at some point. Okay. Obviously, there's things that can change all these numbers, but we're looking for a healthier position on inventory. We didn't see a crazy drop on active inventory. So we still have a chance for this momentum, January, February, March, to be meaningful as it relates to active inventory onto the market. New listings higher this last week than the previous 2 years, 39,400 versus almost a 37,000 read in 23 and almost a 32,000 in 22. We do expect, obviously, when we do rear view mirror on this week, a very sharp decline, as you typically would see on brand new listings coming to the market with the holidays, of course. 37.4% on price reductions is a tick higher than last year at this time at 36%, but below the 22 level at 40% on price reductions. So sellers getting here end of the year a little bit more anxious than maybe they were last year at this time, but still not to the 2022 levels. Of course, just mentioned the 10-year, and this is now almost at peak level for the year. This is going to be one of those things we have to watch going into 2025, as that would slow down the the momentum, or the confidence or the hope in a 2025 home sales market really having meaningful gains and a meaningful recovery, because if the 10-year stays elevated, the 30-year fix is going to stay elevated, and affordability is going to continue to crush so many would-be home buyers and so many sellers that are locked into a low rate right now that are like, hey, I got to get it closer to 5.5. I got to get it closer to the high fives before I can give up 2.85 on my 30-year fix. Pending sales, and we're going to get into existing home sales and maybe some a good turnaround there. But pending home sales now 10% more than last year. So that number, that gap has started to shrink a little bit, but still improvement over last year. All right, let's get into NAR's report here from Friday on existing home sales. Okay, existing home sale top line number. And the big news in November 2024 is now at a seasonally adjusted annual rate of 4.15 million on existing home sales. Just 30, 60 days ago, and as Wall Street Journal is reporting, we're down to 3.85 million on the seasonally adjusted. So we're seeing that number now even out and should finish the year up over 4 million month over month. That's up 4.8%. Year over year, that's up 6.1%. So existing home sales showing some positive improvement. Hopefully the jumpstart of a year in 2025 that we can really see 10, 11% gain, as some has projected as the high point. We went over on Knowledge Brokers podcast on Friday the projections that myself, Tom Toole, and Lisa Chinati made for this 2024. Existing home sales was one of them. We all got it wrong, but there was a whole bunch of projections we went over that we did have right, and it was pretty fun to do, fun pod. If you want to go check that out, I'll have Haley link that up down below. That was Friday's Knowledge Brokers pod. On January the 3rd, make sure you subscribe to Knowledge Brokers channel, separate channel. We'll be giving our projections for 2025. But check that out on Friday. That was a really good way to end the Knowledge Brokers year. Inventory coming in at 3.8 months, 3.5 months, same time last year. Inventory, of course, you get to 6 months, you have an even market. You see that in places like Southwest Florida and parts of Texas where you do have an even or a buyer's market in those markets. Median sale price 406,100 comes in year over year at 4.7% here as of November 2024 closeout numbers for NAR. We'll obviously see where that comes in for the year in about 30 days from now. The existing home sale ascend 4.8% in November to the 4.15 million top line number that we just reviewed, was the swiftest pace since March, okay, at 4.22 million. So really good positive gain and momentum here. The sales accelerated 6.1% from last year, largest year-over-year gain since June of 2021. All right, it'd be amazing to keep this type of momentum up 30 days from now when we look at December. The median sale existing home price rise was the 17th consecutive month of year-over-year price gains, and the inventory of unsold existing home sales slipped 2.9% from the month to 1.33 million at the end of November, or the equivalent of the 3.8 months that we mentioned. By the way, there's a whole bunch of data in here, and we just carve out what you need to know in your hot sheet show notes. Hot sheet show notes, of course, so many of you guys are using this to break down data for your customers and your database, copy and paste, and use this information in your communication. Just give you the most relevant information that you need. Some of those highlights that I just went over. Give yourself the gift of the holiday season by using code HOT to get into BAMX today. You also get the entire Zudilio platform with your purchase of BAMX. Incredible deal. Allows you to generate offers and get more listings. And I've got a Zudilio update here today on top 10 cash markets that we'll go over in just a second. First, let's do the regional breakdown from NAR sale right out of their hot sheet show notes. Sales increased 8.5% month over month, and that was a 6.3% year over year. Midwest, you saw the sales jump 5.3%, 5.3% year over year, 5.6% month over month in the South, 3.3% for the year, and then unchanged in the West. That's a 14.9% jump, though, in the West. Moving down here for the week ending 12/20, here are the top 10 markets for cash offers, and this is according to Zudilio. Las Vegas comes in at 1, Atlanta 2, Jacksonville, Orlando, and Henderson round out your top 5. So you get cash offers happening Nevada, Florida, Georgia in the top 5, Phoenix at 6, LA at 7, Kissimmee, Florida at 8, Palm Beach 9, and Houston, Texas 10 for the last week. Those were where the most cash offers happened per Zudilio. Have access to the Zudilio platform where you can get 4 offers for your seller immediately, as well as check out their home report, which helps so many agents get listings. The upgrade to the home report is outlined in your Zudilio platform. Use code HOT to get into BAMX today and get access to all of that. Mention the 10-year starting here on the holiday week at 4.55. 30-year fixed last week ended at 7.04. We'll see what happens here today. The weekly pumped up to 6.72. So elevated 30-year fixed here on the holiday season. CME Group is not calling for a 37 days from now in the next FOMC meeting, a cut from the Fed. In fact, it is a 91% chance that the Fed stays where they are. There you go. That's your final hot sheet for 2024. It is and continues to be an absolute pleasure to be with all of you guys here each and every single morning. 9:30 on the East, 6:30 on the West. Thoroughly enjoying it. Plans to make 2025 even better. We will be returning on January the 2nd. So Thursday, January the 2nd, for the first hot sheet of the new year. Of course, if there's breaking news, this is the place you want to be subscribed to. If something crazy were to happen, probably would decide to go live here on the YouTube channel, but make sure you're subscribed and hit that. There's a little notification bell. Hit that notification bell so you your computer, your iPad, or your TV will get an update when we do go live. Again, we'll be back January 2nd with the next hot sheet. Until then, have a great holiday season, a happy new year. Much love, and stay safe, stay healthy, enjoy the family. Take some time to really enjoy it and rest up. I clearly need some rest. Caught a little something here over the weekend. But again, Merry Christmas, Happy Hanukkah, Happy New Year, all of it. Hope you guys stay well, stay healthy, and we'll see you back here on January the 2nd. Until then, of course, toodaloo.